What is going on? Billy here from Storm Trades. Yet another trade recap. Today we're going to run through my gold futures long trade that I took on Thursday, July 17th during the AM New York trading session. This day we had a bullish daily bias and a solid change in state of delivery on the hourly time frame, giving me some confidence in getting on sides with a bullish setup on the M5 time frame. Let's get right after it. What's on the chart right now is the last 4 daily candles. So I'm effectively looking at the daily chart. I want to make finding a daily bias as simple and repeatable of a process as possible. And the narrative has to make sense as soon as you look at it. Okay. So if it doesn't, then I'm just neutral on the day. It's no big deal. However, if I have a clear daily bias, it just sort of gives me a little more confidence in understanding how to read the hourly market narrative. So first things first, on the daily, I always set up my charts the exact same way. I'll mark off the previous daily low, previous daily high. I like to run a fib from the previous daily candle. If I was expecting higher prices, I would want to see the wick form in the lower quadrant here, and then to expand up towards some sort of a draw on liquidity to the buy side. Now, I'm looking for, whenever I'm looking at trying to establish a narrative on the daily bias, I want to see where price has recently delivered from, and is it in the form of, have we taken some sort of liquidity, or have we swept some sort of liquidity, or we're coming out of some sort of internal or external range liquidity. So we have recently swept into this daily bullish fair value gap. Price books from internal to external. Do we have any external range liquidity? We do. We have a swing high here on the daily. So to me, this is very clear. Okay, we have internal here, external here. We are looking for higher prices. That's it. It doesn't have to be more complicated than that. I am immediately moving on to the hourly chart. Now, pull up the hourly chart here. And as you can see from Monday, we've been having lower highs, lower lows, lower highs, lower lows. We had this kind of new wick here. This might have been a Trump tweet. And then we resumed lower until we reached a major daily target, which is the daily bullish fair value gap. As soon as we hit that internal range liquidity, we displaced higher and closed above these series of down closed candles, creating a change in the state of delivery. So let me mark that off right here. Now, whenever I have a clear change in state of delivery, I'd like to draw a fib from the swing high to the swing low, and sort to find out if there's anything up here that makes sense from a draw standpoint. And at the minus 2.5 to minus 2, we have the previous daily high and the swing high on the daily. And also, I've been using the 1/3 ADR as a place to find reversals and draws on liquidity. And this morning and overnight, we actually did come down, and we took the 1/3 ADR to the sell side. We have now closed inside of this range, and right around the -1 to -1.5, we have the 1/3 ADR. I like that. I don't need it to hit that. I just need to know that we have enough room for some sort of a bullish setup to form, and then to reach for higher prices. So now, in order for me to engage the M5 time frame, for me to start looking at trades, I want to see some sort of a POI, either swept or traded into, and then delivering from a POI on the hourly time frame. And we actually had that in the form of an old unmitigated hourly fair value gap. We came down when we swept the internal range liquidity, and we took the previous daily low. We actually swept into an hourly fair value gap. So I am now going to go to the M5 time frame, and I am looking for a way to get on sides with a bullish setup. All right, now we're down to the M5 time frame here, and we just pull this right here. You can see we swept into the hourly fair value gap, and you'll notice that we created a change in the state of delivery here. However, there's no swing points along the way until we get all the way up here. Okay, so I actually just wanted to watch price, see how we reacted out of this M5 bearish fair value gap. And ultimately, we had plenty of room until we would get up to the 1/3 ADR. And we also had the London highs and Asia highs up here. So I was fine with watching price to see if we had some structure forming. And then move price forward here. And at this point, right, what you'll notice is we have created this is a bullish breaker right here. This is the highest up close candle prior to the move down that took the liquidity. Okay, and and we still have London high up here to reach for, and we have the Asia high up here to reach for. Right. So as soon as we closed above this, we already had a bullish fair value up here right here on the M5. So this is actually a unicorn, right? So a unicorn is a bullish, in this case, a bullish breaker with a fair value gap overlapping, right? So at this point right here, I set up a long limit. Okay, I waited for the next candle to form. At this point, put in a buy order. Okay, they stop right here, and I was seeking to take profit at the London high. Now, we had into the lunch hour, and as we were kind of floating around underneath the London high, I did not think we would have enough juice to get up there, so I actually exited this trade earlier than that at about 1.8 R. But, let's go ahead and move price forward here. And right about here, this is 11:30. Once we got to right here, 12:20, I exited this trade and just took a 1.8 R profit. Hopefully you guys got something out of this. Again, it's when we're sort of putting the time frame and alignment together, it really helps us understand, helps me understand the direction that I want to get on sides. Okay, is if the hourly time frame is telling the same story as my daily bias, I feel really confident, especially if I have targets above to reach for and that I haven't already taken. All right, if you guys got anything out of this at all, I really appreciate a like and a subscribe, comment, and thank you guys so much for watching. All right, bye-bye.